Right. Good evening, everyone. So I think today we have to discuss last part of the income approach, right? So next day we can start expenditure approach because we have done introduction to national accounting, input approach, it is output approach, sorry, income approach. Today we can finish this lesson and next day we can start expenditure approach, right? So we have to start from page number, I think the page number is page number 9, right? Page number 9, the last tute I gave you, tute 3 on national accounting. Page number 9 was a question number 10, right? Question number 10. So what's the question? Following information has provided regarding a hypothetical economy. First one, employee compensation equal 800. So what's the employee compensation? All the financial and non-financial benefits gained by laborers, right? So next one, interest income equal to 60. Interest income mean the return on capital and yes, return on capital. Next one, interest on non-produced assets. We can identify some non-produced assets. So renting out them, we can earn an interest. Shareholders' dividends. Interest on non-produced assets mean non-produced financial assets, right? Bonds and some securities, those things. Shareholders' dividends, that is the distributed profit from corporate profit. And consumption of fixed capital, CFC, as the depreciation or economic depreciation on capital. Next one, retained profit, non-distributed profit from corporate profit. Corporate tax, that is the tax which should be paid on gross profit, net profit, right? On corporate profit. Next one, mixed income. Mixed income is the income that gain from non-corporate entities such as partnerships and sole proprietors and those. Net tax on production equal 40. What's the net tax on production mean? It should be include which the tax on production process, right? Net tax on production process, which is included in what? In base price, right? So I think we did that on last week or day before last week. So we identified it is the component of value added component of government services, right? That means that value added component of government services, right? Next one, net tax on products. Previous one, net tax on production, the tax on production process, or tax on government services that provide to business, that is the net tax on production. This is net tax on products which have to pay mostly by the producers, right? When they sell in the market, right? And then net primary income. That is the factor income, receipt, the difference between factor income, receipt and payment for rest of world. That means if we have given our factors for other countries that we can earn an income, and if we utilize factors of other countries or non-residents, then we have to pay them back. So difference between that is the net primary income. So those are the line items that have given, and what we have to calculate. We have to calculate net operating surplus. First one, net operating surplus. A, net operating surplus. How to calculate net operating surplus? We know that mainly there are 4 factors income, right? 4 factors are land, labor, capital, and entrepreneur. Without labor income, because labor income we can take it separately. We take it separately. What is it? Employee compensation. Other than that, all the other income part can be categorized under net operating surplus, right? So without mixed income, right? So it should be interest income plus interest income, and there should be also rent income plus corporate profit. Right? We'll check whether these line items are included or not. Right? 1 minute. Right? So what are the items that can be identified from the sum? There are, yes, interest income is there. How much? It is 260. 260 interest income plus rent income. Is there any rent income? No. Rent income is not there. But interest on non-produced assets also there. So we have to include that as well. Right? Interest on non-produced assets. Is how much? 340. Interest income is 260. And next one. What was the line item? Rent income, if any. But here rent income, no. Rent income is 0. And the next one, it is profit. Corporate profit also there. But we know there are 3 items on corporate profit. What are those? Tax, corporate tax. Corporate tax. Is it there? Yes. It is how much? 100. And retained profit also there. So corporate tax retained profit, and what's the next one? Corporate tax, retained profit, and profit that has distributed, that means dividends. Retained profit is how much? Retained profit is 140. Dividends 120. Altogether, total interest is equal to 600, and total profit 1, 2, 3, 380. Altogether, it is 980. Right? If it is million, yes, it is. If it is million, rupees million. Right? So this is the value of, what is this? Net operating or net operation surplus. Net operating surplus equal 980, right? So it is easy. What are the component is there? Interest income is there, right? Interest both. Interest on capital and interest on non-produced assets. Rent income is there, but here it is 0, so there's no any value. And corporate profit also there. Corporate profit can be identified as 3 parts. First one, corporate tax, retained profit, and dividends, right? When we add all these 3 items together, so it is 980. That is the net operating surplus. So what's the next one we have to calculate? It is gross operating surplus. It is very easy to calculate gross operating surplus as well. So here we have net operating surplus. What we need more? We know net should be transferred to gross. Then there should be consumption of fixed capital, right? Because gross when we need to find the gross operating surplus, this net should be transferred to gross. So that is the line item is consumption of fixed capital, plus there is something else. What is it? Mixed income. Mixed income should be there, right? So final answer is gross operating surplus. What's the value of consumption of fixed capital? It is 80. And what's the value of mixed income? 160. When we add all together, 9, 10, so here 1000, 160, 1220. It is the gross operating surplus, right? So this is A. This is A that you have to calculate net operating surplus. This is B, which you have to calculate gross operating surplus. So quickly write down this thing. Right, there's a little mistake here. 100, 200, 300, 360, not 380. 360. So here 960 and 20 should be minus. That means 1200 is the answer, right? Now we can step into next question. What's the next question? It is, I think, gross value added at basic price. Yes. C, gross value added at basic price. So it is here we need gross operating surplus value to find gross value added at basic price, right? We'll calculate. So gross operating surplus was 1200, right? So here we are going to calculate gross value added at basic price. So how do we calculate gross value added at basic price? Firstly, we need what? Employee compensation. And to that we need to add what? All the interest and rent income and corporate profit plus mixed income. So we identified the value of those income by calculating gross operating surplus. Gross operating surplus. How much? It is 1000. It was 1200, and employee compensation is first line item 800. Here labor income is here. All the labor income is here, employee compensation. All the gross operating surplus is included what? Interest. Here it is include interest, rent, plus profit, plus mixed income. Mixed income and also consumption of fixed capital. All the parts are here, right? Then gross value added at basic price. So we can add one line item in here, because I told you when I explained the question, there is some net tax that should be included in base price. That is what? Net tax on production. Net tax on production. How much? It was net tax on production 40. Now 1200 plus 800 plus 40, 2040. What is this value? This is gross, not gross. Yes, gross value added at basic price. So here in the base price, it is include tax on production, right? So this is the value, right? Now, what's the next question? GDP. GDP can be found by adjusting one line item for the gross value added, right? So this is C. C. When we add net tax on products, it is GDP. GDP, you know, it should be at market price. So this is actually GDP at base price. GDP at base price. But we need that real GDP should be calculated under market price, not on the base price, since here net tax on products can be added. What's the value of net tax on products? It is 150. Altogether 2190. 2190. This is the D, value of GDP at market price, right? So what's the last line, last requirement? It is gross national income at market price. So by adjusting one line item to the gross domestic production, we can calculate GNI. You know what's that adjustment? Net primary income or net factor income from rest of world. It is how much? Minus 90. So here, this is the GNI at market price. So it is 2,100. Right. So this is E, right? E. Right. Quickly write down the answer if you want. Right. Here, net operating surplus. Firstly, we calculated net operating surplus equals the accumulation of interest plus rent plus cost. Adding mixed income and one more item, it is CFC. Then this 3-line item was net operating surplus, right? Plus consumption of fixed capital plus mixed income, all together it was gross operating surplus, right? So gross operating surplus plus employee compensation can be gross value added at basic price, but there was another element that should include in the gross value added at base price, that is net tax on production. If this was not there, then gross value added is only employee compensation and gross operating surplus. But this was there, so this net tax on production should be included in base price. So we add all together, it is gross value added at base price or basic price. Then it should be transferred to gross domestic production, GDP at market price. So how to transfer basic price to market price? Simply the difference is net tax on products, right? If there is no any, if there is no any other other elements, it's simply net tax on products. And then we need to add net primary income. Net primary income, then we can find gross national income, right? Very, yes, identify the concept, right? Understand the concept. Here, this is, I think this gross operating surplus is the hard part, right? It is the difficult part, I think. It is also is interest, rent plus profit, net operating surplus. To calculate gross operating surplus, we need to adjust two more things. Consumption of fixed capital, obviously net should be transferred to gross, but that is not enough. We need to add mixed income for sure, right? Then it is gross operating surplus. Gross operating surplus plus employee compensation, it is gross value added, but here net tax on production is there, so that also is a component of base price. Then when we add all these three things together, it is gross value added at base price plus net tax on products, it is GDP at market price plus net primary income, it is GNI at market price, right? Easy peasy. So first question is nicely done. Next question. Question number 11. Right. Following information has provided in a hypothetical economy. Employees' compensation, indirect tax, transfers, farmers' income. Why here farmers' income has given? I told you corporate profit and non-corporate profit are two different things. Corporate profit that we can directly identify through the corporate reports, but farmers' income and other mixed income is the elements of non-corporate profit. So here farmers' income is one of element in mixed income, right? Then consumption of fixed capital or economic depreciation, interest and other investment income. Interest and other investment income mean all the corporate profit type, corporate type interest income is there, and corporate profit also there. Other non-corporate mixed income also there, right? So just read the question quickly. Right. So what do we have to calculate? Gross value added at basic price. A, gross value added at basic price. How to calculate? Now we know in last question we identified how to calculate gross value added at basic price. What was it? Employee compensation, gross operating surplus, and tax on production, right? Employee compensation plus gross operating surplus. Gross operating surplus, how to calculate? Net operating surplus plus mixed income I think we need some space for net to calculate net operating surplus. Mixed income plus CFC. All these three things need to be added. And one more item was there, net tax on production. Right. Employee compensation, how much? It is 550. Now, gross operating surplus including three items: net operating surplus, mixed income, CFC. Net operating surplus. How to calculate net operating surplus? What do we need? Interest and other investment income. Income. How much? 90. What's the next one? Corporate profit. Yes, it's also there. How much? It is 80. What else? That's it. Rent income or interest in interest අපි ගත්තා. Rent income is not there. Yes, rent income is not. So that's it. If rent income was there, it should be also added. Rent was 0. Mixed income. How to calculate mixed income? Mixed income was non-corporate profit, and mixed income is 70. And also farmers income was there. Farmers income. Farmers income is a part of what? It's a part of, how much it is? 20. It's a part of mixed income and also corporate, non-corporate profit. How much? Non-cooperative mixed income. It is 80 or 70. So mixed income is how much? 70 plus 20, 90. Right? So net අපි මේකත් මේ පැත්තට 90යි 80යි. So mixed income was 70. Here 550 employee compensation. Net operating surplus is the accumulation of these numbers here, and mixed income is accumulation of these numbers here, 90, and consumption of fixed capital also, how much it is? 60. Now, is there any net tax on production? No. They have given indirect tax and transfers. It is net tax on products, not the production. So here this is 0. So what's the answer? 550 plus 170 plus 90 plus 60. 600, 720, 720, 810, 870. What is this? This was here. Gross value added at gross value at basic price. It is 870. Quickly write down. So here net tax on production is here, right? It is 0. And CFC is this. And mixed income is this here, because it's not directly mentioned. 80. Here 0. Right? Done. It is clear, right? Employee so we need to calculate gross value added at basic price. So what are the components? Employee compensation, gross operating surplus, net tax on production. Employee compensation was 0. Sorry, was 550. Gross operating surplus, there are 3 components. Net operating surplus, mixed income, and consumption of fixed capital. Net operating surplus can be calculated all the interest and profit and rent income. It is 80 plus 90, 170. Right? Net operating surplus 80 plus 90, 170. If there is rent income, we need to add that also, but there was no any rent income. Right? So mixed income, they have given in 2 separate ways. First one, farmers income and non-corporate mixed income. So when we add all these 2 elements, we can identify what's the value of mixed income. And we add consumption of fixed capital as well. It is 60. So when we add all these three items, we can identify what? Gross operating surplus. So what's the gross operating surplus value? These three elements. It is 170, 260, 320. So if they ask, by any chance, if they ask what's the value of gross operating surplus, it is 320. We don't give it separately, right? We don't need to. Net here, these three items only. Then net tax on production, it is 0. They have not given that value. So when we add all these three things, we can identify the value of gross value added at basic price, right? So if we add one thing more, we can calculate the next one as well. So B is GDP. So how to transfer GVA to GDP? By adding net tax on product. Net tax on products. So net tax on product is equal tax 120 minus transfers 30, it is 90. So GDP at market price can be identified as 960. If it is rupees million, just mention it. Right? Easy peasy. නේ හරියට අඳුර ගන්න ගාන හදන විදිය මේ ගානම දැන් ඔයගලන්ට එකපාරක් බැලුවට මත හිටින්නේ නැහැ ළමයි. You need to watch this video again and again. ඔයාට දැන් ඒක වාසියක් තියෙනවානේ මම කලින් නිකම්ම ක්ලාස් එක කරා නම් it's just one time. ඒ වෙලෙම ඔලුවට දා ගන්න ඕනේ නැත්තම් නෑ තමයි. But now I'm recording and give it back to you to watch whatever times you want, right? You can need to watch continuously or 3 or 4 times per day. Then you can take good thorough knowledge about national accounting income approach, right? I'll erase this. If you want, you can pause. Yes, I'll erase. Right. Question number. So it was question number 11, right? Not the 10. Now question number 12. Previous one, question number 11. Here, question number 12. So what's question number 12? Following information has regarding a hypothetical economy. Employee compensation, interest income, rent income, other investment income, including retained earnings, retained profit 100, consumption of fixed capital, net tax on production, net tax on production, net tax on products, mixed income, government transfer to household, social security payment, primary income receipt, primary income payment, net secondary income, including private income 200. So the official income 50. It's kind of lengthy question. Okay, read the question. I'll drink some water and quickly we'll do. Right, last but not least. So what are the requirements? First one, gross value added at basic price. All right. So we'll see. We know what are the components of gross value added at basic price. It is employee compensation, gross operating surplus, plus what else? Net tax on production. So what's the employee compensation value? It was how much? Employee compensation equal 2,200. 2,200. And then gross operating surplus is consist with interest income for so here interest income, $400. What is rent income also there? I think we need more space. Rent income how much? 600. And what else? Other investment income including retained profit 500. Including retained profit, right? Keep in mind there was retained profit 100. It's useful. We have to use that at next in a next question. And what is consumption? Capital. Yes, consumption of fixed capital all should be there in gross operating surplus. අපි කෙලින්ම gross එකටම යන්නේ. Net operating එකයි. So there are three parts නේ. What are the three parts? Net operating surplus. එතකොට මේක තමයි ඒ තුන. Net operating surplus and what else? Consumption of fixed capital, CFC. So here CFC is how much? It is consumption of fixed capital. Yes, it is 300. And the last part, mixed income. So those three parts නේ. එතකොට අපි මේක වෙනම ගත්ත net operating surplus එක plus CFC plus mixed income. Mixed income was, yes, mixed income is how much? 200. Mixed income, yes, it is 200. හරිනේ ඒක. අපි ඔක්කොම ටික එකට ගත්තේ. Because here net operating surplus plus CFC plus mixed income. When we add all these three together, it is gross operating surplus. So here net operating surplus is 1,500. If you want, make a, it's not necessary, but I'm displaying it because for your understanding, right? Just for understanding. Here so 1,500 net operating surplus and here 700 more. It is CFC was 200, 300. Mixed income was 200. So here 500. Now gross operating surplus value is 2000. Here employee compensation value is 2200. And plus there was one element more, it is net tax on production. How much it was? Net tax on production. Yes, it is there 200. Yes, 200. Don't take net tax on products, right? It is for GDP. 200. Right. When we add all these elements together, we can identify gross value added at basic price. $4,400. Right. What's next? Gross national income. GDP එක අහන්නේ නැහැ මේකේ. කෙලින්ම GNI at market price. ඒතකොට මේක A. ඒතකොට අපි දන්නවා GNI gross national income එක හොයන්න නම් GDP එක හොයන් ඉන්න ඕනේ. Plus net tax on products equal net tax on product was equal 600. So GDP at market price equal 5,000. And so we need GNI at market price. GDP එක transfer කරන්න නම් GNI එකට we have to add what? Primary income, net primary income. How to calculate net primary income? Here on last three elements there was primary income, receipt and payment. So here primary income receipt is 200, payment is 300. 200 minus 300, it is minus 100. So GNI at market price equal 4,900. So this is the answers for A, gross value added at basic price, and B, gross national income at market price. Right. Right. Quickly write down. Also, next one that we need to calculate household income. Right. We'll do. We need this one. Keep in mind 4,900 gross national income at market price. 4,900. To calculate C, household income, we need GNI, gross national income was 4,900. And to calculate household income or personal income, we need to remove some elements and we need to add few elements. So what are the removing elements? Here, depreciation is no need to calculate household income, then just remove it. Consumption of fixed capital was how much? 3 or 200. It is 300. So 4,600. It is NNI, net national income. Now we can transfer this is to which income? Household income, by removing elements which is not including household income but including national income. What are those elements? First one, net tax, all the net tax, right? Net tax is not belongs to household, it is belong to government. Net tax on products as well as net tax on production, both should be removed. So it is product 600, production 200. 600, we'll remove all the elements at once. 600 and 200. Right? Here, remove all the elements. Which are not include in national income, but which are not including household income, but including national income. National income එකේ තියෙන household income එකේ නැතිව තමයි අපි මේ අයින් කරන්නේ. පළවෙනි එක අයින් කරා net tax on products. Second one, net tax on production. Which element? අපි දන්නවා තව මොනවද? Interest income, employee, other investment income, consumption of fixed capital removed, net tax on production removed, net tax on products removed, mixed income, government transfers to household still not there. Social security payment, it is not received by the household at the moment, right? Social security payment, how much? 150. Primary income receipt, primary income payment. That's enough. Eh? There was retained profit. Yes, retained profit is not belong. Retained profit and corporate tax both can be need to be eliminated, but here they have not given corporate tax, so we don't know what is the value. But here retained profit is there. Retained profit retained by the corporates. So minus retained profit. It is how much? Retained profit including 100. It is 100. Right now, can remove all these elements. CI, the CI, how CI, how CI, Panahai, Dahai, Igdas Panahai. 1050 need to be deducted, and there are elements that need to add. Add elements which including in household income. මොනවද household income එකට එන ඒවා? අපි දන්නවා තිබ්බා මොනවද? There was Government transfers to household. Transfers to household. How much? 250. What else? Net secondary income is, they are including 200 private income. Private income should be there. Private transfers. Net secondary private income is 200. Is there anything else? Pension or something like that? No. Government transfers කියන්නේ ඉතින් pension තමයි. Or සමුද්දි වගේ තියෙනවා නම් those need to add back. 450. 1050 need to be add and 450 need to minus. So net 600 is removing. So it is 4000. Here this should be add and this should be removed. For net 600 should be minus. This is the value of household income. If they ask disposable household income, you need to remove personal income tax, but they are not asking me. If they ask disposable household income, just remove the personal income tax from household income, right? Easy neither. But time consuming, but it is easy. So here add element which include in household income but not include in national income. Remove element which are not include in household income but include in national income. Right? Homework done and dusted. Right? It is easy, but the thing you need to understand is you need to get the concept, right? What does the concept mean? What is the gross operating surplus? What is the net operating surplus? Right? Gross operating surplus is net operating surplus plus mixed income plus consumption of fixed capital. What is the gross value added at basic price? Employee compensation, gross operating surplus, add what? Net tax on production. අන්න ඒ විදියට ඔයාලා මතක තියාගන්න මේ ගාන දිගින් දිගටම හදද්දි මේ වීඩියෝ එක දෙතුන් පාරක් බලද්දි ඔයාලට ඒක මතක හිටියේ. Right? Then we'll wind up the session for now and we'll start what's the next one? Expenditure approach in tomorrow or next week. Right? Okay, then have a nice day. Goodbye.